Hey guys, so I'm going to get right into it. What we're going to do here is look at the stock charts. We're going to try to get a read on where the market's heading next week. Big old move to the downside, obviously, last week. And, I think the market's primed for a reversal or some sort of a snapback rally. Again, I will be looking for an opportunity to reestablish a new short position on a snapback rally. But I do think there is an opportunity to go long for a snapback rally, and we're just got to see some signs. I actually, on Friday, I was long several trades on Friday. I didn't catch the last 5-minute or 15-minute rip, but I did get the rip in the early morning, right at the open, and then another rip. I got several kind of upward moves throughout the day. Where I was able to capture, $2, $3, $4 on the way up. So that was good. And I trade the triple Qs. So you can see here, here's, if I can zoom in, here's the triple Qs. When the market opened way down here at this 198, and then it ripped and got all the way up here to 207. So I was able to capture most of that move. And then I sat on the sideline for it when it came down. And then I caught a couple other moves where it popped about $2 each time to the upside, actually, long. I was not really... I got a couple shorts, but a lot of day trading action on Friday. And then this last 15-minute move, I was not participating in. I was actually flat. So I closed the day out on triple Qs completely flat. And then I'll look to see what's happening next week. I do think there's an opportunity for a rally, but let's go ahead and get into it. But before I continue, give me a thumbs up, give me a subscribe if you're new. Follow along. I've been calling I've been bearish the stock market for quite a while, and I have a lot of reasons why. Technically, the charts on the SPY is broken. It's been broken since 2018, so I've been pretty bearish since that time. So that's kind of the trend. I'm going to continue to play the bearish side until I see something different in the charts. But here's the NASDAQ futures. And again, we got to watch the NASDAQ, the tech stocks, the FANG stocks. That's basically the entire market. All the other stocks, a lot of the other sectors have not really been keeping the market propped up. I mean, you've got financials who have not done well. You've got, the Russell 2000 has not ever hit the highs that it made back in 2018. So there's lots of sectors that have not done well. And then there's sectors that have done very well, which is the XLK or triple Qs. And those are all tech sectors. And so tech is when holding the market up. And so when tech breaks or fails, that's when this whole market comes crashing down. And that's exactly what we saw with what happened. I mean, the FANG stocks were down 7-8%, 5% each day. I mean, they just took a beating last week. So that's why we really want to watch tech, because if there's going to be any kind of rally, it's going to start with tech, nothing else. And it's the most heavy-weighted sector in the S&P 500 as well. So that's why you want to watch it. Here's the NASDAQ futures, and you can see we've got this downtrend line. So this is all of last week. Just pretty much rode this line in the futures all week. I don't trade futures, so I wasn't able to really trade this complete chart pattern. And a lot of these moves you can see in the Qs came in the form of gap downs in the morning. So we were getting huge overnight gap downs, and then not nearly as much trading action throughout the day, and then big gap downs, and then a lot of the big moves came towards the end of the day. You can see here, I mean, this was a big gap down, and then it traded sideways mostly that day. This day it actually did move down pretty steadily throughout the day. It was, I think, a trending day, and then basically another gap down to the downside, and then it didn't really start moving towards the last couple hours really from the gap down. I mean, here's the gap down price right there, 208.93, and you can see really within the last hour it fell from 208.80 all the way down to 205. So the last hours where the movement came there. and really in the last part of the last few minutes basically. And then a big gap down, and then we'll move up. So not a huge opportunity to short intraday. However, I did have full-size positions. I had a full-size position from the breakdown point right up here when we broke trend on this candle right here. I had a full-size position, and I was able to catch the entire move down to here. And then I did not catch this big, humongous gap down, which is sucks, but it's hard to get it all. And then I did catch little portions of the move here, not with a full-size position, but however, I did have a full-size position at the end of the day here, and I caught this big gap down right here, and then finally started to look at long opportunities and started to go long down towards here and started to get some long trades. So all in all, good week for me on trading the markets. However, let's look at where things are going, okay? We got this downtrend on the NASDAQ futures. We need to see this downtrend broken. So if we get an hourly close on the futures where it breaks above this, then we'll start to look for, this to hold as support. So maybe we get a break above and then it comes in back test and then you get the move higher. I've got this line, this green line outlined here. I think that's the target. That to me seems like the target where a kickback rally would basically fade out and then the next opportunity to short would come in. And that's if we get all the way up there. I mean, that would be a pretty good opportunity to get short. I'm not sure we're going to get there, but again, we got levels all along the way. So for now, watch for a break above and then watch what the price action does. Does it break above in the futures and then can it close? You need an hourly close because this is an hourly chart. So we need an hourly close above the downtrend line. And then what's the next hour look like? Does it come back and back test? And if it does, you could start to look at opportunities to go long there and see if it will hold. And if it doesn't hold, then you go ahead and just cut it. And again, we're talking about hourly closes. So intra hour doesn't matter. The only thing that signals buy and sell signals is the close of the hourly candlestick. Okay, let's get into the Qs because this is really what I trade and what a lot of other people trade. So we do have a downtrend line. Let's see if we can mark it out. It's not necessarily the cleanest. Let's something on the lines of maybe that right there. Let me adjust this to red. Something on the lines of about there. And so what I'm looking for is some sort of a break of this. Now we did have this resistance right here at 205.79. If you roll out, I get that from this, we had a little bit of reactions right here, came back. It's not the cleanest support line. I mean, this uptrend line here was pretty steady, so we don't have, and it was breaking to all-time new highs each time. So we only have a couple data points to outline our support and resistance lines, our horizontal ones. So we have to kind of evaluate those, but we'll get more. It'll start to show us kind of where things are at. But you can see right here, we've got a little bit of a pivot point. And if I roll this out here, let's see if we can mark this out on anything. Yeah. So you can see it ran up, found a peak, came back, bounced off support, and then gapped up, chopped around a little bit. But so we had some reactions around there, and then we get this, came down and held support right here, and then gapped down, ran right up and found resistance, and then sold off. So that's a nice little clean, valid reaction line. 214.60 it looks like, 214.57, somewhere in there. So if we do get a move higher, we should run into resistance at 214.60 and struggle a little bit there. But I do think that we're probably going to get up to here at this 222, maybe higher. The ultimate trend line would be a full back test all the way up to this line up here at 230 or wherever it's at. Basically, this upward channel right here, you can see this upward price channel that I have marked out. If we come up, we should run right into that, and that should be resistance. So look for some sort of a move. Probably going to fall short. Probably going to act like we're going to get there and fall short, and the sellers will step in and front run it, and it'll move down. I don't think we're going to get that high, but you never know. Ultimately, 214.60, and then we've got this other level right here, 222.70. You can see that we had some reactions along that over here where it was resistance, 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 gap higher above it. So oftentimes when a trend line is there or some sort of a support or resistance to get through it, they'll gap above it, and that's what we saw. So clean reaction right there. And then also you can see we gap down right to it. So that's probably the target, 222.76. If there is a rally that starts next week or maybe the week after, then 222.76 would be probably the target to go long, or that'd be the profit target for a long trade. And then I'd probably be looking to flip short right around that level. We might get up here. You could take a half position here, and if it wants to continue to run, then you could add to that position. Or you could take a half position, and if it starts to roll over and fade, you could add to the position. Personally, I'd probably prefer to just take a full position right here and let it run against me a little bit if it wants to. I'd feel more comfortable because I don't want to, I want to make sure I get the fill, and I think this will be an area where if it does run, it's not going to run a lot, and then it's going to roll over. So that's how to trade the Qs. That's how I'm looking. Now, if we just reject on Monday, let's say we gap down, well, then this trend line's still intact. And so how much lower can we go maybe before we get a reaction? Well, we can go really low, but we have this major, major trend line right here, this red one that I've outlined. Let me go ahead and mark that in a different color so everyone can see it, and then I'll let everyone know why it's such a major trend line. So it's purple, and this is such a major trend line. You can see on Friday we gapped down below it and snapped back and instantly recovered with a nice impulsive rally. So this held as support. This major trend line right here held as support. Where do we get the major trend line from? Well, if I roll on the daily, that comes back from the entire bull market of the last decade. So that is your uptrend line for the bull market on the daily chart. You can see reactions here, reactions here, reactions here. Cut through it a little bit here, but snapped back and recovered that. And so they can cut through it, a little bit, but that doesn't mean it fails. If you really to give this thing, you could have been short, obviously, and I was, obviously, when it cut through and then had another day below, closing below, I was short and caught almost this entire breakdown here. But, here you only had one day where it cut through and the next day it instantly recovered. And same story right there. And so, again, we are right there. And we pretty much held at it. You can see, we did hold at it. We opened lower and then snapped back and closed all the way up here at 205.90. So this might be the beginning of the rally, kind of the snapback rally. Everything is extremely oversold. I mean, look at the RSI on this daily chart. It's sitting down at 26. Right there, 26. So way oversold on the daily. And we were at support. So again, drastically oversold and coming into major, major support. To me, that signals an area where you want to look, where you want to get long. And that's why I was long on Friday. I went home flat because I want to, that was the initial reaction. So oftentimes especially when you're oversold on the RSI and you fall right down to support, and we were gapping right down to support. So to me, that screams that's a screaming opportunity. Anytime when you see something, especially if it's really oversold or overbought, and you're gapping right at that support or resistance level, oftentimes that resistance level will hold on that first reaction. So that's exactly what I saw. Saw it gapping down, look for the long. We undercut it just a little bit and shot right back up, and it held. So that's the first reaction. But oftentimes the second reaction you'll break, and with heavy momentum. So the second time that we get down here, I'm not interested in being long. I'm actually going to be looking for shorts if it actually wants to start breaking. But if first we get a rally up to some of these levels, then I'll be looking to get short up here. And that's what you want to see. You know, when a rally would make everyone feel like the pain is over. That's how bear markets work. You know, they fall drastically and hard, and then they rally and make everyone feel like it's over. And then you get the next leg down, and everybody at that point has taken such a beating, they don't want to sell their stocks and take huge losses, and they just hope that it's over. And then a little rally comes in, giving them a little bit of hope that they're getting some of their money back, and then the next leg down. And that's just how it works. So that's the nature of the psychology behind a bear market, and how people end up riding the things all the way down is because the market continues to give them hope with these kickback rallies, and they feel like, okay, if I can just get even, if I can just get my money back. And that's why I don't think you want to wait to get, all the way. I don't think we're going to fill this gap right here. That gap is the trap that trapped the money in. And usually they don't give the opportunity to get your money back. They'll get close. You'll get close to feeling like you're starting to get your money back, and then it sells off. And that is, that's how bear markets work. So for anybody that's new to trading or hasn't been around to, been involved in the stock market, and has only experienced the bull market over the last 10, 12 years, then welcome to the next bear market is what I would say. The charts, the read that I get from them tell me we're in the next bear market. So you gotta switch your mentality. You have to switch. Throw the hope stuff out of the window. Don't hope you're going to get your money back. Okay, when you start to get your money back and you get a rally, sell into that rally. Sell the rips. That's okay. It's not buy the dip anymore. It's sell the rip. So you start to get your money back. You're not going to get it all back, but you might get some back. Take that as an opportunity and sell some of those long positions if you have them. And if you're looking to short like I am, then that's when I actually start to establish my shorts. Moving on to the SPY. I don't trade the SPY a lot, but the thing about the SPY really is just this weekly chart here. Here's your bull market of the last decade rolling up, and here's your breakdown right there in 2018. So this is when I was very bearish. This is when I started flipping bearish, and I was like, okay, we're now in a bear market, or we're starting one, and then we just got these Fed-induced kickback rallies, kind of manipulation kickback rallies, right up to the very top, back testing the trend line, and then boom, impulsive breakdown, massive volume. It doesn't get any more of a sell signal, a long-term, bigger picture sell signal than this. So with the gap down, I mean, you got the trap, you wake up in the morning with this massive 800-point gap down that traps all the money. They're just instantly underwater, and then the massive sell-off. So it doesn't get any, nothing's for sure when looking at charts and trading stocks, but it doesn't get much clearer than this signal that we just got. So maybe we get the little kickback rally, and then I'd expect another big red candle on the weekly chart after we get this rally, right, following it. Maybe that's a couple weeks, or maybe next week's just another massive sell-off week. We don't know. But when you're in a bear market, expect to see a lot of big red candles like this. IWM, false breakout right here. So you had this big sideways channel right here. You started to break higher. Everything looked great. Failed once. Tried it again. False breakout. Recovered. So we came almost down to support. Support is right here, 142.53. They stepped in a little early. So maybe we get a kickback rally. But again, failed breakout. That's not a bullish sign. That's a bearish sign. If it was going to break higher and make all-time new highs, like back here in 2018, it would have done it. It had two chances. Had a chance right here, failed. Had another chance, failed drastically. This thing shut down. So bear market is all I see in this. And if you roll out and look at the weekly here, let me get rid of this advertisement. Doesn't get much more bearish than this. Look, here's your 2009 bull market. You're running. Fail back here, back in 2018. This is the thing that most people didn't see, but I've been bearish pretty much ever since. So it's been a while. All my videos, for the most part, have had a bearish bias, and that's because of this chart pattern here, and on the SPY mostly. We broke down, kickback rally, started to run, instant failure. What this tells me is we're heading lower. So we're gonna, we're probably gonna tag this one for anybody that wants to trade the small caps. Here's a trend line right here. Oh, right around the 127, 128, somewhere right in there. This is a weekly chart, so the levels are probably slightly obtuse, but it'll give you a rough idea. And then obviously we got the lows that we made back here in 2016. So yeah, I think we're heading down there, and probably a lot lower, to be honest. I can see this thing getting pretty nasty. That's as far as I'm going to go on that one, though. XLV. Let's look at XLV. I mean, very bearish. Okay, you had this big uptrend line. I started to look at shorts when we broke this uptrend line right here. I was like, okay, time to get short. Caught a couple trades, short little trades here and there, but it wanted to chop on us. It made this megaphone pattern, and then boom, instant rejection. So at this point, all you can hope for is kickback rallies to resistance and then failure again. It's got so much work to do. It can kick back, but it's going to run smack into resistance. It's not a supportive chart anymore. It's a, it's a broken chart. So ultimately, look for lower prices here. XLF. Let me look at this one on the weekly. So here's your 2009 bull market. Running up, running up. Here's your break in 2018. Common theme here. Everything broke in 2018. The only thing that didn't break is tech. And that's why I was like, all we got to do is watch tech. Everything's broken. And if once tech breaks, everything's going to fail. And that's basically what we've seen this week. Well, we broke some kickback rallies. Never quite got there, but instant rejection. Right to support, though. Look on the weekly. Here's your support. And I had this line already marked out, clearly. But here's your support at 25.89. So that was a spot you could step in and buy. Maybe there's a kickback rally. Next time we get down here, next time, if really, I think it's a matter of when, not if, but, maybe we don't. But next time we get down here, 25 around this level, most likely breaking lower and starting the bear market in this chart. So you got a support level right here on XLF. Right about there, somewhere right in there. So going to fall down to probably that one. If we break that, down we go. We'll have to cover that stuff when we get there. Apple, Apple felt the support. Here's your support. This goes back to this kind of most recent rally here in January of 2019. So, this is the big sell-off. Here's the Fed reversal. And, you kickback rally, and this was a little bit of a fake out because you had the kickback rally and then you recovered the major support line, this black line. If I roll that out, that's your 2009, you can get the idea, but that's your 2009 lows, right, all the way back here. So here's your bull market. We broke, and then this one recovered. And this is one of those, crowded trades that everybody was plowing into thinking that Apple just goes up forever. Well, now it's sold off, but did sell right down to support. So Apple at this point, what I see, it's right at resistance. Not looking good. It actually overshot it and then failed and closed the day right at resistance and the week. So we're going to have to watch this one. I think this one probably stops right here and fails, and that's not going to bode well for the stock market and everything else. So there might, it's tricky to say if there's going to be a rally. That might have been it. It might have just happened. If Apple can recover, then we'll have to watch that. But it is right at resistance right there. So, all right, that's enough stocks. Let's look at some gold. Well, that's enough market analysis. Let's look at some gold stocks and try to figure this one out. 1 sec. All right, so gold to me seems just like a really great trade. And fundamentally, the Fed just came out on Friday. I mean, you could see it. You could see how they kept bringing out Fed governors saying stuff. It wasn't working. They brought out another Fed governor, still selling off. Finally, Jerome Powell had to come out and say something. And he pretty much queued up the market for a rate cut. He basically said, we're going to use our tools to keep the market from crashing. that tells me that the Fed doesn't have the strength or constitution to allow the market to reprice itself, and they're going to try to manipulate it and keep it higher through money printing and rate cuts. Well, it's not going to end well, but that's great for gold. So that's kind of why I've been really interested in the gold miners. Gold took a real beating on Friday and Thursday. Took a real beating, especially the miners. They got, I got whacked pretty decent on my Barrick Gold. Luckily, I did kind of take some profit as it popped up here. I sold a little bit, but still had a relatively sizable position. It got beat down, and fortunately, my short trades and short positions, really softened the damage that I took here on the gold. So that's good. And I actually bought a good chunk of stock on Friday. Here's what we're seeing in gold. All right. Even though gold took a big beating, and I know it doesn't seem like why did gold go down? But I think gold went down because margin calls were being fired off all over the place on people's accounts, and they were being forced to sell winning positions like gold. Gold is in a bull market. I mean, gold just recently ramped up 20%. Gold's not going to go up 20%, and then when the market starts crashing, everybody gets scared of the safe haven risk-off asset like gold. No. What happened is gold is people are getting margin calls, and they're being forced to sell their gold to cover their losses for that margin call. So gold got wiped out on some margin calls, but that's people being forced to liquidate, kind of winning hands, and that's your opportunity basically. It's kind of like real estate when they had to liquidate their winning good quality real estate. Even they didn't want to sell it, but they had to in the last crash. Well, that's what I see. That is what happened. So I took advantage. If someone had to sell their gold position and they didn't really want to, but they had to because it was a winning position, well, I'm going to come in and buy that a lot cheaper. So I ended up buying some Barrick Gold right down here at the very bottom, and here's your support. Again, had this line marked out for a while, and it came right down to support. I added to the position right there, and we started to move higher. So I suspect next week we move higher, and this should be I would think this is going to be a pretty fast move up, and that's because this move down was a forced move, and people are going to recognize the arbitrage that can take place here and how they can kind of take advantage of other people's misfortune, I suppose, and it should start to move higher pretty quickly. Gold bullion fell right to support right here at 1565, held support, started to move higher. So, I mean, when something's at support, it's in a bull market, fell right to support, that's a buying opportunity. And Barrick, the one I really would like is this AEM, but I don't want it here. The chart just doesn't look as good as some of the others. It's not at support. It's moving lower. It didn't have the same kind of reaction that like Barrick did. So, yeah, I mean, it moved a little higher, but what I'm looking for is this one. I'd like to buy this down around this $39, $40 range. Not too far down, but if this can sell off a little bit more, then I'll be looking to be a buyer down here. And that's your support line. Newmont took a big beating, but and I don't buy Newmont, but and I don't even chart it really, so I don't have it marked out. I kind of started to mark it out, but nothing there that I really. Silver, I did sell this one. I mentioned this on Friday. It is right at support / resistance, I guess. But silver, given the nature that it has, how much it's used in industrials and in manufacturing, I think it's getting whacked a little bit because of that, and it's not the same kind of trade as gold can potentially be with safety. It can be that trade, but it can also be an industrial manufacturing play. So big gap down. I had to get out of that thing pretty much at the open, so I got out, and it took a little bit of a beating on that, but I didn't have a huge position on it, so. For now, I'm just going to watch it. If gold and silver want to run together as a safety trade, then I'll get back in. Until then, I'm going to kind of treat silver with kind of a hands off. I mean, it's at support / resistance. You can see it fell all the way right down here, 15.54. So we'll see what it can do on Monday. If it can recover this, maybe we can buy it back and see if we can hold this trend line at 15.54. But we got to watch it. And this is the other thing, the dollar. This is the other reason why I think gold is just a screaming buy right now, and the gold miners are screaming buy. You've got the stock market crashing, you've got the dollar crashing, and you have gold crashing. Gold is an inverse play to the dollar, and typically an inverse play to risk-on assets like the stock market and tech. So, I mean, the dollar fell a lot and gold fell. I mean, I think that's just a screaming buy. I don't know how else to put it. And usually when things, I like to buy things as they come down right into support. That's a great time to, add to a position as long as it's a bullish chart, and the long term, this is a bullish chart. So if this breaks and we start to get kind of lower lows and lower highs, then we have to change our tone. But for now, bullish chart, we're right at support, should move higher, especially in the face of kind of what's going on in the market and the fear that's out there. People are going to see the imbalance in gold, and I think they're going to rush in and snap up all those all the shares and everything that everyone just were forced to sell. I know I did. So, all right, long video, guys. Sorry if it took a long time. I think there's just a lot to cover. I just want to get everyone really primed on these levels, focused on the charts. If you look at charts a lot like I do, you can kind of see how things just play out, or how they should play out, and how they line up. And it really helps when the trading action opens up and the market's open, and you can see them just react and bounce and move around these levels, and it helps you get positioned properly. It will help you take longer term positions and bigger size on longer term kind of positions, because you're able to kind of read these charts and see these charts on a daily basis and understand how they should perform. And then if they don't perform how they should, then you can start to question your trade or your thesis and look for opportunities to exit. But it does help you establish good long-term positions, as well as take day trades and swing trades. So hope you enjoyed it. Hope you guys are getting some value out of the content and out of the charts. Again, this channel, if you're a bull, I would ask you to at least analyze and question your thesis, your bull thesis, against technical indicators and the charts, and understand why you're a bull. What are the reasons behind why you're a bull? Are you a bull? Are you a bull just because the last 10 years there's been a bull market? Because that's not performance in the past doesn't guarantee performance in the future. And to me, I'm a bear now because the charts, the SPY especially, they're all broken. They've all given me confirming bearish action. Everything is basically screaming, sell the rips. And we're going to continue to do that. So good luck, guys. Appreciate the time. Give me a thumbs up and leave a comment below if there's something you want to say. And we'll catch you on the next one. Bye.